So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling here. No trade calls, no recommendations. Every response for their own stuff. We're here for educational purposes only. So, welcome everybody. Hope everybody's doing fine. As usual, about once a month, we try and do these live sessions. If anybody wants to stop by and we can look at some charts. So, again, if anybody's looking at anything in particular, shoot, don't hesitate to ask. I'm more than happy to look at any chart anybody wants me to look at. If not, I'm just going to go through what I think are the most interesting things going on here. And then if there's questions, we'll keep on going as long as there's questions. If not, we'll wrap it up, okay? So here we're in a kind of low liquidity chop kind of environment, right? Market is extremely thin, and we're just in a grind higher waiting for some kind of a catalyst, right? So this kind of market, again, despite the fact that what we say is this is a kind of market that grinds higher on thin volume and on poor structure, so it's a market that is susceptible to hitting air pockets. It's still not a market you want to blindly try and short because, you know, as the saying says, you never want to short a dull market. You always have a positive drift in the market, and this really helps it. So you'd expect any dip, no matter what kind of air pockets get hit or how violent a mini flash crash can be, it'll get bought hard unless there's a real catalyst, right? So as you saw the other day, you got that move out of nowhere, bam, got bought, and we're back to the races. So that's the kind of environment you're in, and that's what you want to keep in mind. Now, of course, you had a situation where the market tried to rally hard on the 50 cut and more cuts, and that's no longer the case. Then the market tried to rally hard on China's stimulus, and then that didn't pan out quite as well, et cetera, et cetera. So even though there's a lot of reasons for the market to possibly try and correct a little bit or go sideways, as long as we don't get some kind of catalyst or volume pickup again, it's fairly unlikely to do so, okay? Hey Knut, how's it going? So right here, we're still grinding higher. As we discussed, I think even here in past live sessions, the upside targets we've had on this ES, on this measured move, essentially since we came back down here in October 2022, it's the same move that's still trying to play out. And that is for, back into the 6,000, 6,118. Those are the extension targets. And that's what's in play. Now here, one thing which is interesting is, as we said, the rip higher was led by Fangman and by stocks. And what you see here, and the tech stocks, and what you're seeing here is this Fangman is stalling, right? So this is a chart of Facebook, Amazon, Netflix, Google, Apple, and Microsoft. No Tesla in here, but basically you see how it's stalling, right? So if you want to get a feel for what's going on, a good way to look at it is, as long as this stalls, right, but you see something like RSP is continuing to press higher, that means you still have that rotation in the market, out of tech into value into other things, right? Even though the rotation, the bid that was going into energy is, kind of evaporated. We'll look at that in a second when we look at crude. But here, as long as you have one of the two printing new highs or catching a bid, then it's okay. The market, even though choppy, will likely continue its grind higher. Now, if you just see at any point in time a situation where Fangman is stalling to make new highs, so that the heavy hitters, the big weights and the indices can't really get traction. At the same time, you're getting no breath in the market, so you're seeing no real move in the equal weight, then it's an indication that it may be time to look for some kind of tactical shorts. But I'd like to stress this, that in a thin market, in a low liquidity chop, to get aggressive to the short side, you really have to see everything moving in sync. So you have to see the dollar, bonds, everything moving in sync, all the indices moving in sync, because as long as you don't have the indices moving in sync, or you got some kind of rotation going on, that will still remain ultimately bullish for the market, even though it's choppy, even though it's painful to watch sometimes. We've got extremely thin volume. On Monday, we had about 700,000 E-minis traded during RTH. Yesterday, we had just over 700. It's very, it's holiday market kind of volumes, but, price is that, no matter how low the volume is, as long as it prints, it's real. But you have to understand that it's doing that on weaker structure. Okay. Now, looking at some other charts, gold, nothing really is happening here in gold. Still continuing. This is in the targets to upside targets to the measured moves are 2750 and call it 2950, and that's still in line. And as long as it doesn't come back below this range, this is even. It could even go sideways. Kind of consolidate or correct sideways to then go higher. What I would have in gold is upside drift, upside targets in play. This is the chop zone. This is kind of like the neutral zone I would be keeping in mind. And anything inside here is neutral. Upside, of course, upside drift into those extension targets. And if for some reason we trade below, close below the 50 DMA, then that opens up a correction back into 2500 into this breakout zone. But that should still be a fairly solid level. Okay. Hey Angela, how's it going? How's sound for everybody else? Can somebody, Luca and Knut, how's sound? Is sound okay? Can you just type it in if it's okay? So just to make sure. But on my side, it says sound is fine. Let's see. Yeah. Okay. Yeah, exactly. You have to be a little bit patient. Just have to be a little bit patient. That's all. Exactly. It is what it is. But let's see. Oh, so sound is slow. Let's see if I can play. Let's see if I can change this. Okay, so. Is this getting any better? Is this any better? Is this louder? Not sure I can do. Okay, cool. Okay, good. Yeah, for some reason, it looks like one of the settings gets reset every day. It won't hold it. Okay. So, here we go. So again, you have to be a little bit careful here. So if we're looking at crude, what's happening on crude? Crude still trading extremely heavy here, right? If you look back on the weekly, yeah, sure. Here it looks like it's trying to rally on all that Middle East, Israel. Possibly in attacking nuclear or energy refining stuff in Iran. And then as soon as they said they weren't going to, this unwound completely. So interestingly enough, from that high in about 78s, we've come back into 70s. So you have to conclude that the premium for Israel hitting some refinery or something or some kind of energy targets is $8 to $10, which to me sounds a little bit low. It still sounds like the market is fairly complacent, but that's what it looks like. Now, again, as we've discussed many times before, I think that here you have some kind of Washington bid, right? Some kind of a bid in this area. So it's a very tricky one to try and get short into this zone. If anything, I would be looking at this area for some possible tactical longs. Keep in mind, the market is very short. I don't particularly have any interest in doing anything here, but gun to my head, I would be looking for opportunities to have some kind of tactical long, maybe try to risk manage myself to break even or better on an intraday play, and then hold over the weekends in case something happens, right? Also, as we've said, pretty much Israel has said they're going to strike Iran again, even though it's only going to be military targets. And if you think about it, well, we're about 2 weeks away from the election. So chances are, unless they really want to throw a curveball and do it during the election, chances are it happens before that. So your base case assumption would have to be that the next weekends or weeks, next 10 days are live. So clearly I wouldn't want to be holding, and you never know what could happen. I wouldn't want to be holding any short crude positions overnight, right? Now, going on DXY, now again, I think this is what's catching a lot of people off guard. It's been fairly clear in terms of move, as we've been discussing. Basically, dollar is stuck in this broader range we've been talking about for a long time, right? And basically, this range is 106, 100, and 103 is mid, okay? Now, our base case assumption is that unless something, and again, keep in mind, today we have a lot of data. We got Netflix after the close, we have ECB. But our base case assumption is unless we have a clear path from one of the central banks, it's unlikely that this is really going to break out of this range. Okay, so what do I mean? Unless we have an absolute clear commitment from the Fed to go on, full-blown cutting cycle every meeting, or unless the ECB commits to something more tangible, it's likely that we still see a lot of chop here also with the geopolitical risk, right? Unless we see some kind of divergence or some kind of clear commitment, it's unlikely that this is going to break out of this range. So what tends to happen here is I think people get excited trying to, every time we get towards the upside of this range, everybody's calling for the dollar to go to 120, yada, yada, yada. Every time we're coming back to the bottom side of this area, you get people saying, okay, that's it, the dollar, it's the end of reserve currency, dollar's going to 80. And it's just people getting trying to accelerate in front of a brick wall, right? And then everybody gets caught offside. So to me, this is not particularly surprising. The way I would look at this here is, and again, remember the market was really offside on this trade, right? So, starting at the beginning of the year, market pricing in a gazillion cuts, then it's not happening. Fed's telling you it's not happening. Market's still hell-bent on pricing in a gazillion cuts, right? So here, I just look at 103 as pivotal, right? 103 is pivotal, and this is just it just continues to be a range trade. And as long as this can hold above 103, whether it's squeezy or dip that holds, then the path of least resistance is this to try and come back into the 106 mark. And if we get anything concrete out of the ECB, if we get any possible catalyst, then this comes right back below the 103, then I will be looking for this on holds below the 103 to try and come back into the 100. But globally speaking, to continue to stay in this kind of range unless something substantial happens. Okay. Now, also clearly you have the yen playing out here. I can't remember if we discussed this last time, but I've been short yen for a while, and then covered a couple of weeks ago when it was clear that they're going to be waiting until more data to the back end of the year or next year to continue hiking. So maybe that's another thing that's that could be a catalyst. But for now, if you I would say if you look at how the market is positioned, really, get max long risk, no fear. Don't want to miss the Christmas rally. We're going higher. Fed's going to cut a gazillion. Get max short crude. There's no need to hedge anything. No geopolitical risk. Nothing. The risk is if somebody's going to get caught off guard. The move where people are going to get caught off guard is USD back into 106. Okay. However, I would not necessarily be trying to predict what's going to happen simply because there's so many variables. There could be a lot of curveballs that are thrown to us into the election. Luca, I would prefer to just look at each chart independently and trade each chart independently. Again, keep in mind, of course, this is about 60+% euro, but I would look at each chart independently rather than try to come to some kind of a conclusion on the dollar and have a bias that's going to influence everything I do. I'd rather just trade each chart independently, right? And if you look at, since we're talking about FX here, if you look at this move on USD JPY, really technically, this move here, the market tried to front run this earlier at this previous high, and the fact that it's not holding it would likely mean that, especially if it can't get below this low again, the path of resistance is a little bit higher. So I think a lot of people are very eager to short USD JPY again. I mean, if there's a technical setup or some kind of an aggressive failure, maybe, but I suspect this is something for the back end of the year, if not next year, to get back short for that final move into the back 120s, 130s. Right here, it probably looks like that 152 continues to attract, right? So CHF JPY, I haven't looked at this in a gazillion years. Do you have a specific question here? I mean, again, this looks like it's attempting the grind higher. I suspect some people are going to say, is it putting in some kind of a double top here? This is a tricky one. I would probably consider this, you've got a situation where, it's tricky, right? You're trying to play against two central banks. I mean, technically, I don't see anything super interesting to do here. I would suspect that this tries to continue to go higher, but it seems very, very choppy, right? I don't know if you're looking at anything in particular, but it looks like it's fairly comfortable here for now. You've got this whole previous resistance that is still holding. This looks like like a false break, right? So as long as we can't get back above this level, this is probably trying to put in that kind of topping process. But if it gets back above, then it could easily hit a little bit of an air pocket to go back into those highs. So you'd probably want to, you see, these are the zones I don't like because there's a lot of different levels. You see what I mean? There's no clear level across the board. There's levels all over the place. And again, this is clearly, SMB, BOJ, mumbo jumbo. So I don't think this is a particularly interesting chart for me to trade. If you probably want to have another feel for it, you see those moving averages are flattening, right? And they don't mean much when they start to flatten because it just means there's no trend. But you can either look at this whole range and say, okay, well, this is going to be kind of like the bull bear area, right? Stay bullish above, bearish below. I probably prefer to look at this as a bull bear line to the upside. And the bull bear line to the downside is extremely messy because there's so many different points. Very, very tricky trade, right? If you're looking at euro, again, it was trying, if it was going to bounce, you'd expect it to bounce at the bottom end of that channel and hold the 200 DMA. And here it's going to be messy today with the ECB, but clearly it's going to be down to Lagarde and Co. So either, depending on what they say, but if they start, depends how dovish they are. But this kind of break opens up a retest back into these lows, back into the 105, right, Luca? And that's basically that move back into the 106 on DXY. So I think here also into the ECB today, you can look at this level, you can look at that kind of channel that we had up earlier, look at the 200 DMA, but basically this is going to be the bull bear line, right? And hold above opens up a retest all the way back into these lows, and a hold then opens up this move. But I think the bar for this to really rip higher is probably fairly high, right? It's fairly high. I think we'll have a little bit of a clearer view tomorrow, right? We'll probably have a much clearer view after today. Then remember, always on the ECB, depending on what we get, then you'll get source comments later on in the afternoon. And, it's a very similar situation on cable, right? Trying to hold here, and it needs to hold. Now, you do have a lot of different zones here where it could try and catch a bid, but likely euro is going to be key here. And if depending on data, but if that dollar can stall a little bit, if not, also this is you're looking to an unwind back to the 123, right? Still stuck inside this broader range. Aussie, See also coming back into that 200 Kiwi below. So, that dollar is very, very strong here, squeezing a lot of people, catching a lot of people off guard. And the other thing you have to keep in mind is, this is a key one to keep in mind, if you're looking at the 10-year yield, because as long as we hold here around the 4% mark, it's still okay. But, if you start to see the 10-year moving back towards 4.5, etc. Remember what happened last time yields started going up like that. It's not going to be very, very easy for risk assets not to pay attention, right? You've got DAX put in a negative reversal at all-time highs. You got a nice little put, but remember what we said. As long as the market stays thin, right, and there's no catalyst, this rallying on poor structure is bound to hit air pockets here and there, brutal air pockets. But unless it's on a real catalyst, those are likely going to get bought, and they're likely going to get bought hard. And as you see that here, on not much. Now, again, we had ASML, etc., causing a little bit of a panic on Euro stocks. But once again, you see the move you had here yesterday, right? In one day, basically, it unwound 9 days of ramp. Those are the kind of air pockets. But since, it's nothing huge, you see it's getting bought straight away. So again, here on Euro stocks, I'd be watching this whole confluence of moving averages here very, very closely, because if something happens and we lose the 200, then that really opens up an unwind back to that, August 5th low. But, you need some kind of catalyst, and as we said, there was a bounce zone also on the bonds, and they're holding, right? The bonds are holding, the dollar isn't so far, but this is again very, very key level, very, very key level to watch. Now, what's interesting, again, as I said, in some of the tech names, you're really seeing this rotation, right? And not all tech being super strong. So you've got Apple stalling here, still fairly strong, kind of like Nvidia holding the breakout. But if you look at some other stuff like Amazon, it's really not going anywhere, right? It's stalled. If you look at Microsoft, it's still looking fairly heavy here, right? Back below. You're looking at Facebook. This is not looking good. We had a nice little short set up the other day, intraday. This is still in place, not looking too good. Google not moving. So again, it's really up to, we really need to see breadth coming back into the market, and, RSP, all those other stocks compensate and catch flows. Or if those stall, you need to see the money coming back and also the big tech names. If not, then that opens up for a little bit of shaky ground, right? So here, if you're looking at Bitcoin, what's going on Bitcoin? Well, Bitcoin is looking very, very, you've had a lot of headlines here, and it looks like you've got an awful lot of bids supporting here, right? An awful lot of bids supporting here. So here, I haven't looked at this for a while in terms of volume picked up there. So, you have to keep in mind, it's hard to really read too much to it. And keep in mind, Bitcoin's been rallying pretty much in line with risk. And broadly speaking, even if you look at other currencies, it's still stuck in this broader range, right? So clearly, if you see this starting to, all-time highs are bullish, all-time lows are bearish, if you can see this managing to take a stab here, then, that could really kick off a really good squeeze. But you need to see what happens at those highs, because for now, every single move back above 6,700 has pretty much 67,000, has found sellers, right? There's been plenty of selling back. So I don't know if it's just very, very comfortable here inside, 55, 75, and it's just waiting for the next big catalyst. Clearly, it's hard to argue that this is bearish here, but it's for the real bullish catalyst, it's important to see how it trades above here. For now, it seems like you've got plenty of supply here and you've got plenty of demand here, and it's just stuck. You see what I mean? So we'll have to see. What happens there. China, again, as we always say, China has number one for disappointing. Look at that monthly candle. Look at the monthly candle on Hang Seng fairly ugly. Again, I really don't like being involved in here. Some other interesting things, URA. We've been talking about this for a long time. Still bid now that all the tech companies are starting to look at nuclear. It's clearly holding keeping a very strong bid underneath it. No change for us really. We've got a primary target here at $40. Extension target 70 and above. We'll have to see what happens. DBC kind of stuck. Again, everything's kind of stuck here. Waiting for some real catalyst, for some kind of volume to come in. If you look at copper, again, in line with China, a lot of disappointment, just completely unwound, not an awful lot to do there. And EM, similar, still holding a little bit better, but fairly disappointing after China. So that's pretty much where we are, right? I don't know if there's anything anybody wants to, there's a lot of different ways to look at, to trade uranium, right? You can either look at the, you can buy physical, you can buy, some kind of trust, you can buy an ETF, you can buy the miners. So there's a lot of different ways to look at it. It really depends what you wanna do, right? Probably the least non-perfect way of doing it, but the least work is probably just doing it through, something like URA or the Sprott Physical Trust, one of the ETF or the Sprott Physical Trust. So it's really depends on how you want to look at it, but there's a lot of different ways to play it. Look, you can email me if you want more details. Okay. So is there anything else anybody wants to look at? Anything anybody wants to discuss? Again, keep in mind that today we've got, here pre-market, everything's bid. We had TMC basically earnings out good. So everybody was panicking on ASML. So that's taken the panic out. So you can see here pre-market, you got NVIDIA bid, AMD bid, all up over 2%, almost 3%. So that's kind of saved the day for now. What's going to be interesting is the Netflix earnings after the close. But even core retail sales, unemployment, we got Philly Fed. Now, keep in mind here that we're also going to OPEC expiry. OPEC expiry is not that crazy, but, into the end of October, a lot of people will be looking at this bullish drift to continue, all the way into May next year. So keep in mind, market is positioned long. Market wants to go long, and especially unless there's a catalyst, and especially if we stay trading like this with thin volumes, the path of least resistance is to continue higher, right? You don't fade a dull market. You don't fade a slow market. You don't fade a market that has no catalyst that wants to go somewhere, right? Now, it doesn't mean it can't hit air pockets. You have to be careful, especially overnight risk, especially risk over the weekend, but especially intraday, it's fairly clear what the market wants to do, what it's trying to do, and what it's managing to do. Now, also, if you think about it in terms of possible catalysts, unless it's something that hits out of the blue, whether it's something on the geopolitical front or one of the earnings or something like that, if you look at the data counter, until we get to the back end of October, so, on the 29th, we've got JOLTS. So that week starting October 28th, because you've got JOLTS, you've got ADP, you've got the BOJ, you got core PCE, you got non-farm payrolls. So again, that is the week where in balance on paper you have the most possible catalysts. And until then, I hope not, but it could still be a fairly slow chop, low volume grind, which tends to be hard to trade because either you're forced to chase on poor structure or, you just have to kind of sit it out, right? Hey, how's it going? I don't know. We looked at gold earlier, but really there's not that much I don't know if you have any specific question on gold, but there's really not that much going on in gold, right? We got upside targets, 2750, 2950. And right now, what I was saying earlier is that we're kind of stuck in this sideways kind of neutralish box, right? And bullish above and bearish below. If we trade below, especially as the 50 DMA comes in, then that opens a potential move back into 2500. But unless there's a huge catalyst, you'd expect that to be fairly solid support, right? So kind of like this box here. And keep in mind, you've got a lot of targets to the upside. But I think this is not a trade where people are, this is not the kind of move where people are trading this technically to peel money off at TPs, right? People are holding this for, a moon phase, a moon shoot, right? So here, I think most people, instead of, and I would do the same, if I were positioned for this, I don't have any position in gold, I would not be looking to take any profits. I would be looking to trail my stops, right? Because you just, especially when you're at all-time highs, you don't know, any new high possible. So that's where we are pretty much on gold. I don't know if that answers your question, or you're looking at something else. But apart from that, here today is also on ES. You just have to be a little bit patient, and as long as, I can't stress this enough, Monday we had about under 700,000 E-minis traded, and RTH yesterday just over 700,000. It's extremely slow. It's painfully slow, right? You could see here, just dead volume. Then we had that little air pocket hit out of nowhere. You got a little bit of a pop, volume going back to the average, pretty much 20-day average. But then yesterday, once again, it's absolutely dead, right? Absolutely dead. This is kind of like holiday trading. So you just have to take everything with a little bit of a pinch of salt. And before making, it's a kind of market where you want to treat each day one day at a time, take it as it is. And unless you start seeing things moving in sync, you can't trust any move, right? You really can't trust any move. Euro USD, we also looked at it. Basically, it's in line with DXY, right? So basically what we were saying on DXY is that we're stuck in this broader range, 106, 103, 100. And unless you have something very, very clear commitment in terms of path from one of the central banks, will likely continue to stay inside this range. Right now, market's caught off guard, so we're really squeezing higher. And I think the pain trade here, the risk is for this to move all the way back into the 106. Now, again, it's going to depend also what we get out of the ECB, but 103 pivotal, right? So bullish above, bearish below for still stuck inside this kind of range. And if you take that over to Euro, it's, again, you could see it very clearly, right? The market is trying to hold here, right, to move higher. But if it can't, and especially if we close below here today, that opens up an unwind all the way back into the 105. And that's very similar action for all the currencies, really. Here, the important thing is to, in this kind of market, to not, to not fight flows, because you'll get carried away in a stretcher, and not to get too stubborn on any move. You want to stay tactical. I'd say you want to, whatever you do, I'd like to lock in some gains on the day to get paid every day, and then buy myself some optionality for bigger moves. But I would always want to make sure I get, I lock some in on any trade, because it's not an easy market. It's a choppy market. And again, everything looks easy in retrospect, but it's a little bit tricky. So you want to make sure that, you get paid on any intraday trades, and on the bigger trades, on the daily trades, we probably need either a good catalyst or you need stuff to set up completely. So for example, the other day when you had a negative close at new all-time highs on YM, but you didn't have that same kind of failure, same kind of location on any of the other indices, and you didn't have exactly the same kind of action intraday, you have to be suspect, right? All these moves have to be a little bit suspect. Okay. Any comments, any questions? Again, I'm happy to go on as long as anybody has questions. If not, we're going to call it a day. We've been going for what, 35 minutes? But so... Okay, looks like no more questions then. Okay, so China action price. Hey, China, well, talked about it briefly earlier. China, I don't like to try to trade China at all, simply because it's all made up, right? So you really have very little edge. Here, you've got, the problem here is that you're not trading technicals, right? You're not trading technicals at all. You're just trading a potential headline of made up stuff that can change the next 30 minutes or so. So you have very, very little edge, right? Unless you have some kind of, something. If you're just looking at the technicals, you don't have an awful lot of edge. Now here, if you're looking at it on the daily, out of nowhere, you had the rip on stimulus announcement, and then, well, really it didn't seem, it's cracked up to be not a lot of data, and the market is unwinding that. So if you think about it just logically, right, if we ripped because we thought we were going to get something and actually we're not really going to get something, the only logical thing is for the market to go back into the scene of the crime, right? Now add to that a lot of retail trying to chase getting long at the highs that have to get liquidated. It probably means even more downside traction. Now, of course, you've got rumors about retail clients in China opening up trading accounts all over the place because they think it's free money because the government said they're going to support the stock market. And these guys are really getting hosed now. Now, could you get a situation where the CCP decides, well, we told everybody to open up stock counts and yada, yada, yada. Everybody got hosed. Let's put out another headline to make sure people don't lose money. Sure, this could rip, but I can't stress this enough. You're just trading headlines, right? Which you don't know what headline's going to hit. So I don't think there's an awful lot of edge. If you look at it monthly, this looks horrible. If you look at Hang Seng, it looks horrible. But again, I don't think I can add any real value because it's not a technical move. There's nothing to look at in the chart. It's just headline, right? It's just headline trading. I hope this answers your question. So, my pleasure. Last call. Any more questions? Any other charts? Again, more than happy to stay on as long as people have questions. Hey, my pleasure. Okay, so it looks like no more questions. Guys, as always, try and do this. Hey, Knut, nice seeing you around. Nice doing this every once in a while. Happy to see everybody in here. And we'll do it again in a couple of weeks or in a maximum in a month's time. Thank you for stopping by. If you want to share or like the YouTube thing, that would be cool. If not, catch you back anyway, okay? All the best. Take care, guys. Bye-bye.